Okay, so we are here with Lisa Palmer from First Security Bank and going to get some questions answered regarding the interest rates. So, Lisa, thanks for
Hi.
coming.
You're welcome.
I want to ask you, with the Fed cutting interest rates recently, a lot of people expect our mortgage interest rates to also be coming down, but that isn't happening. And wondering if you can kind of speak to why that is.
Yeah, that's actually a very common question. Why aren't rates coming down, mortgage rates coming down when the Fed has adjusted interest rates? And actually that federal funds rate is an overnight lending rate for lenders, for banks to borrow from each other. So it really doesn't have anything to do with mortgage rates. And there is a trickle down effect in some consumer products like your credit card or a line of credit, things like that. But for mortgage rates, it's more of a statement of our economy. So the Fed is in charge of monetary policy. So it's more about what they say and how our economy's doing. And in general, you can kind of say mortgage rates are typically lower when there's a little bit of a turbulent economy, and mortgage rates are typically higher when the economy's faring pretty well. So we get to now, what's going on? Well, the target rate for inflation is 2%. It's at 2.4%. We have made great strides in lowering inflation. And oddly enough, we have some really spectacular economic data, that's surprising economic data that's come out kind of in support of things aren't so bad. Are things great? No, but they're also not as bad as would take to have lower mortgage rates. So actually mortgage rates keep going up. Now we are solidly probably in the 6%. Some loan programs can still get into the high 5s, and depending on borrower circumstances, they're actually looking in the low 7s. And so, that's why rates are not going down, is we have a little bit too much good economic data.
Okay, that is good. That's good in some ways.
Good.
Right?
Yeah.
And then second question for you. Some people think it would be best just to wait to buy a house until the interest rates come down. Speak about why that might not be a good strategy.
Well, especially for our area where appreciation, even in not very good times, is still pretty good. This is, of course, speaking specifically about our area. So when you talk about appreciation and the relationship to interest rates, you have to think, well, if I bought a house right now and I'm looking in, for example, an $800,000 range, if I waited for interest rates to drop, who knows when that might happen? Maybe that house is worth $900,000 and the rates are a point lower. Well, the issue is that the payment's going to be remarkably similar for both of those two circumstances. So would it be better to buy now and take kind of a discount, if you will, on the real estate, the home, and then just redo the mortgage if rates drop? I also heard a really great saying. Someone was saying to their son who was looking at buying a house, saying, oh, rates are so much higher than I would like them to be. And he said, you have to look at these rates like they will never be better. You cannot make a decision based on mortgage rate. What you can do is find the home you like, make sure you can afford the payment, and then if rates drop, you can always just redo the mortgage. And I think that's the best advice for people, is there's no reason to wait.
Good. Yes, I agree. Especially if rates do happen to drop, you're just going to be competing with more buyers.
Yes, exactly. It makes the market more competitive. But also the big thing is buyers are looking for savings. That's why they want lower rates. So you can get a discounted, maybe a little bit of a discount on your real estate now, and then maybe you can save like $400 or even more depending on the situation if you were to refinance. I mean, that's pretty significant. So
great.
I wouldn't wait.
Okay, great. Thank you so much, Lisa. I really appreciate you coming to do
Absolutely.
this.